Okay, good night everybody. It's me, Barry, from Awesome Calls. Tonight, I don't have a lot of stuff planned out, as I was telling the guys that were here before. I had a lot of stuff to do before I got in. But I am gonna, my screen's, my chart actually is blank with no indicators or lines or moving averages, anything. So tonight I'm gonna try to set up a simple chart for you guys that hopefully you can profit from on a regular and consistent basis. So let's add a few things. I don't care what chart we're at. It just is really just for okay, add an indicator. Well, let me just check something here. Oh no, okay. Add an indicator. Okay. First thing first. Hold on. Maybe the volume button is down. Let me see. Volume's up. Okay. Can you hear me now, Andrew? I think I put it up a little bit. Maybe. You heard fine? Okay. So everybody's hearing fine? Alright, cool. Alright. So first thing, add an indicator. I always have a volume indicator on here. So let's do volume. And let's change the color of the line, obviously, because it's got to be white for me because of my black background. And let's just hit apply and see what happens, okay? Okay. I leave the length at the standard length, what it is. And, okay, so the color, obviously, green is buys, red is sells. And the bar thickness, I usually just bring it up so it doesn't look so skinny so I can see them. The bar thickness, just do it to whatever liking you like, and the line, just obviously bounce it off something that you don't have. So if I increase the length of the line over here and I hit apply, look at the indicator down there, you'll see that it smoothens out a lot, right? So I don't really want it to be so smooth because I actually want to see change in direction. So I'm gonna leave it at the 20 that it was at, and we'll leave that there. Apply. Okay. So, in this indicator, obviously you see volume bars, big sell bars, obviously big sell bars here. I don't really care what chart this is, I'm just kind of doing reference. You can see also now that the line down here moves up and down, obviously. Now, when you see a line that's divergent down and a price that's moving up, usually having a problem right off the bat. Just something you need to think about. Whenever there's a volume that's going down but a price is going up, there's always a issue right off the bat. Obviously I never looked at this chart this far out, but that would be something I would pick up on, that the volume's going down but the price is going up. So it's exact opposite. So it should not be like that. If the price is going up, the volume should be going up. And so that's the volume. It's really pretty simple. I have these, I squinch them up a little bit. I make them smaller because I have 3 of them. Alright, so let's add something else. Hey, what's up, Clint? Alright, moving averages. No, let's do the indicators on the bottom first. MACD. I use MACD. Length is 12. Length is 26. And the smoothing is 9. That's default settings right there. So let's change the line to white and the other line to red so that you can clearly see it. I make them skinny because I want to see exactly where they're crossing. Let's just hit apply and see what happens. Okay. So this would be the MACD over here. Okay. Now there's a bunch of settings over here on this source over here. You could just do price close. If you do price high, obviously it changes the way that the MACD looks. If you do price on volume, it obviously changes the way the MACD look also. Now if you used it this way, it gets a little bit confusing. So just leave it on price, open close price, and that's kind of default settings. So you want to leave it there. Now if you change the smoothing on this, let's say if we change it up to 15 or so, you'll see that this line over here smoothened out a lot. Now it helps you a lot to decide where to get in and get out of a position. If I moved it down, it becomes a lot more choppy. Sorry, with the chart. So you don't want that. So I usually have mine at 10. So on the MACD it's 12.26, and I usually have mine on 10. Okay. Okay, I increase these bars down here too because I like to see them. Okay, and this one over here, I'll increase that one. We'll change that one to green. Obviously we need one that shows up and one that shows down. Shit, wrong one. My bad. I haven't messed with these settings in a while. Set this back to red. Okay, and we gotta change this one to green. Okay, so it changes the top bars, alright? So we'll apply that. So now you have your MACD and you have your volume. I also have stochastics. Now I'll show you the difference with some of these. The stochastics slow. Let's see, let's apply this. Okay. The line's gotta change. It's gotta be white because obviously my background's black. So I have mine at 20 and 8. And lines with shadings apply. And my hot zones are at 80 and 20 because when it's over 80, I wanna be more short biased or looking to sell my positions, and when it's on the cold side over here, I'm looking to get into something. So let's hit apply on that. Okay. And I usually have these kind of small. You'll see them, they're about an inch big. They don't take up my entire screen. I can actually have them really small, and it doesn't bother me because I can see the shaded areas here right off the top. I can see when it's hot. I can see when these two lines cross, and obviously I can see when the volume comes in. No, RSI, let me throw in RSI for you and you'll see the difference. You should always throw these things in so you can see the RSI. You can see the difference on them. Let me just apply this. Okay. Shading. Trigger line. Okay. Okay, so that signal line is there. I'm gonna change this one to red so that we get as much comparison as we could. RSI bands are set at factory default. They're set at 70/30. And I have this thing where you can set it on as the RSI gets hot or cold, it'll highlight these areas here. So if it's a hot RSI, it'll highlight. If it's a cold RSI, it'll highlight. But I don't use RSI, so I don't have this on my platform, so I'll take that out. But it's a kind of cool though. But it gets a little confusing. I've used it a couple of times, and then I had to take it off because it was just like they were just colors were just popping up all over the place. And okay, that's that. Apply. Okay. Difference with your RSI. Let's open up your RSI and your stochastics, and you'll see the difference. Okay. Stochastics over here, we're saying that it's still cold. RSI over here was actually saying that it's actually hot. So RSI wins on this one. Stochastics over here all the way through said it was cold. RSI over here started to diverge over here. It was actually giving you a trigger to buy. but the stochastics did cross right at this point over here, and the RSI kind of did cross a couple sessions before that on this point over here. So they're both very similar at this point. Stochastics, on the other hand, was giving you a signal that this one's a little hot up at the top. So if you were just trading off stochastics, luckily you would have gotten out of ZFGN up top here, and you would have still been in ZFGN up top here because your RSI didn't hit up at the 70. So in this case over here, your RSI would have failed you if you traded just off that. Your RSI would have failed you because it never got up to the 70 band, but your stochastics would have saved you because it would have been telling you, hey, it's time for me to get out of this position, that it's kind of hot. So let's X out of that RSI. Let's get this stochastics down a little small, and we can go into add in something else. Give me one sec. Okay. Oh, wait. There's a volume on the mic. Okay. Sorry. There was a volume bar on the mic. Okay. You guys can definitely hear me better now, right? Everybody? Sorry. My fault. You caught all of this other stuff though, right? That I was talking about? Just give me some feedback whenever you guys can. Add indicator. Okay. I like to use moving averages. Let's throw a couple moving averages in here. Let's do an 8. EMA. Apply that to the chart. So the 8 EMA is in red. And let's add another one. Again, moving averages. You throw a 13 in there. EMA again. Apply. I gotta change the color. Let's do the 13 in white. Let's make it a little skinny. Okay. Sorry, Dan. Alright. Well, good thing I had to cough because I muted it. So, and then I figured that I had volume on the thing too. Because I got 3 volume controls. I got one on the Omnovia thing. I got one on my mic, and then I have one on the wire off the mic. So stupid. So I gotta just check all 3 of them next time. Alright. So we're all good. Okay, so we have 2 moving averages here. We have the 8 EMA and the 13 EMA. How do I use these? I'll show you. A simple way to use them is just when they cross. You always, when you're doing a long trade, you want to use the smaller over the bigger. So always think about it like that. So whenever the 8 is over the 13, you go long. Whenever the 13 gets over the 8, you go short. Example would be right here. You can see right there. After the 8's on the bottom, right? So once the 8 crosses over that 13, that's your signal there to buy. Even though you missed out a lot of this, it's a more sure signal that the trends are moving in the right direction. And then that would be your buy signal right there. I should get a better chart though. Let's switch this chart. Really don't care what it is. Let's get something with a little more life to it. Okay, like in this case over here. Okay, right here. You see where the 8? See where the 8 and the 13? This is a daily chart. It doesn't matter if I'll switch it over. Doesn't really matter if you use in 1 minute, 2 minute, 10 minute. Doesn't really matter. Let's do a 5 minutes so we get some. And tree didn't have much action today, but UVXY did. So let's use that. Okay, get this in the middle. Okay. The 8 and the 13. The 8 is the red, the white is the 13. Whenever it crosses up, the 8 goes over the 13, you go long. And then whenever it crosses down, you go short. And then whenever it crosses up, you go long. Now, is this a fail-safe way? No. But do you find the exact bottom of a trade? No. But can you consistently make money off of this strategy? Yes. I guarantee you can consistently, if you wait for these patterns. And there's another few things that I need to talk to you guys about it, but if you wait for these consistent crosses and be patient with your trades, I don't care if you use 1 minute, 5 minutes. If you use 1 minute on this strategy though, you get faked out a lot. I'll tell you that off the top from experience. You'll get faked out a lot because it's not set up for when I came up with this, I didn't really come up with it, but when I kind of came across it and started using it, some parts like this trade, it would work perfect. You would get in here and you would pretty much ride it all the way up here because it never crossed back down, so you would keep riding it all the way back up here until maybe at this point here where it crosses down, and you'd get out of this long position over here all the way there. And even if you, when it crossed back down, even if you went short, you would be down here. And then if you went long, right when it crossed up again, you would be into the money here. The 8 and the 20 won't give you the same reaction. It'll be a slower... It'll be a slower move. I'll show you. Simple moving average and exponential. I like the exponential. I'll show you why. Give me 1 sec. Let's throw something in. Moving average. Let's do the 8. Let's do simple. I'll change the color on that one so you'll see. That's the ugly color. That's just kind of difficult to read. Okay. Let me kind of zoom into this so we can see some of the differences. It's just confusing right now because we're in it, alright? So the 8 exponential is the red, and the 8 simple is that orange color. Really not a big difference as far as how they trend. If you follow it all the way down, is it gonna make a big difference on this strategy? No. Are you gonna lose money anywhere? No. But if you look really closely, say for instance down at this area over here, you would, let me see if it would be, you would have gotten in on this one on the 8 EMA at this cross right here. And if you waited for that orange and white line cross, you would have gotten in here. Is it any difference as far as, you know, catching this move? Definitely not. If you got in here or here, would it have made a difference if you caught this move? Definitely not. So the EMA really it works better with the price and the volume. You're right, Mike. It follows a little bit more technical analysis. Basically, it prices in stuff that the simple moving averages just doesn't. And sometimes if you go into a way bigger picture, you'll definitely start seeing the difference with the simple and the exponential. I just use the exponential because it does price in better than the simple does. I'm gonna remove the let's remove that SMA, because let's focus on finding a strategy that can help you get into and out of a position safely and profitable, right? Because that's the bottom line, right? That's what everybody here is for. We have 44 people here, and you just want to find a strategy that, hey, how do I get into something at the bottom and how do I get to sell at the top, right? So here's a 5-minute chart. Let's go back to UVXY. Let's go through some of the stuff here, right? Now, when I was buying UVXY today, why did I buy UVXY today? Because first of all, off the top of my head, I know UVXY have never breached 24. So I know that top of my head. And this was the bottom right down there. My first entry was 23.96 because I waited for this hammer down here, then this bullish engulf in here. Once this gapped up over here, I was in it. So I got into this right here on the bullish engulfing candle on the first entry of UVXY I did today, and I sold out some here, and I actually got back in to UVXY here again based off the double bottom. So had nothing to do with the moving averages when I got in. I was playing basically double bottom, knowing that 24 was a very important number for UVXY, and knowing that my candles would stand up. So I have a hammer, bullish engulfing, came back down here to retest the line, never broke it. So my stops actually went, I mean it's somewhere on that chart that AJ did for me too, where it says tight stops 23.96 long, because it was just, I was pretty sure that this one was gonna work out. So and I didn't even look at any other stuff here. If you look down here right at the bottom, you'd see that the stochastics crossed before the moving average crossed too. So you see the stochastics would have crossed right at this arrow, which would have given me this entry over here. The RSI also crossed. I'll open up the MACD, sorry. This is the MACD over here. So if you followed the MACD crossing, you would have gotten in right here too. And the volume started to curl up right here. So you went kind of down on the volume, but then she started to curl up. So once you start seeing that, let me bring this up. Once you start seeing, you see how this line is going down, 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 down here, and then she starts curling up. Like, I can X out that entire chart because I don't care to look at the chart. I will look at the indicators and how they react to the price action. Well, I can't open it that big. Okay. Can open that bigger, and we can open that bigger. Okay, so without looking at the chart at all, what would I see as far as buying and selling stuff? You can buy here, right there, and that would give you this entry over here. You can buy here on the stochastics, and that would give you this entry over here. And obviously, when a chart starts getting choppy on you, you leave it alone for a while. You never want to play with the chart that's choppy. It's either it's going up or it's going down. But if it's going to go sideways forever, just screw it. Find something else. There's a billion charts out there to trade. So once it got out of the chop over here, you have a perfect MACD cross there. Your stochastics came up off the cold zone, so you know now that the chart has a lot of room to run. And then the volume started to curl up. So off those three alone, just the indicators alone, you're starting to realize that, okay, maybe this chart has some room to run. Now, obviously, when I was telling you guys that I chose my trade off the double bottom and off the candle patterns, not off the moving averages or anything. But if you also looking at this chart in another aspect that I really teach on is flags. So if you see that this trend over here was being broken, you could still go long right at this point right there when that downtrend was broken. Right there, you know, wherever. That arrow just moved over by mistake. So you could have gone long right there, where it broke the downtrend to the upside. So in this general area over here, how many signals did you have to go long? I would say you had quite a bit of signals here to take an entry long, and I don't care what chart it is, I'm just showing. You had, if you're into candles, right at this point over here. If you're into candles, you had a hammer, you had a gap up. That's one reason to go long into a position. You had a trend break to the upside. You go long on that reason. You had a double bottom here. Good reason to go long on any trade. Risk right under the double bottom. And then you had the moving average right there. So you had 4 reasons in this circle to go long. And if you move down to your indicators, you had 1, 2, 3 reasons here to go long. So you had 7 reasons to go long in this trade right here. So yeah, the 2 were EMAs, yeah. So a lot of people say now, you know, why am I buying here? You know, why am I buying up here? And if you find yourself buying up here and you miss this, you can just turn the page and find another trade. Because if you missed this and you find yourself buying up here, you better just be scalping or something. Alright? Now, if you got up to the top over here, say you missed this and you got up to the top over here, and you still, obviously, we're still seeing that this volume line is moving up. Your MACD is still moving up. Now, stochastics, okay, here's how to play stochastics. Not just because it's green means that it's going to tumble. Okay? When a stochastics is up over the 80, over the 80 line, or even under the 20 line over here, when it's over, it doesn't mean that it's going to sell off. It just gives you a signal that, hey, I'm getting hot. I may want to cool off. You know, I can still run at this area here, but not for long. I can't run here forever. It's like your car overheating. So she can run hot, and she's not gonna blow up on you, but it's not gonna last forever. So once she's up here now, you're not focused on your indicators as much as you're using them as your side view mirror in your car. Just a glimpse over, make sure nobody's in the lane next to you. You know, this is a glimpse over type deal over here. These guide you as you go along, like you're driving along, you know, you just want to glimpse over, make sure nobody's on the side of you if you want to cross, change lanes. So these are your glimpse over things, you know, these are not your focus, these are not your energy. Your energy is going to come from finding the bottoms and focusing on your candles, or in this case, what I'm showing you guys with the moving averages. You're focusing on your trade. You're glimpsing at these as you keep driving. Alright, so yeah. Here's the indicator list. Set properties. I'm on a 5-minute chart. EMA 8, EMA 13. Both of them set on close. 8-0, 13-0. Okay? So in this chart, and I'll just switch over because maybe you guys think it's just that chart. It could be any chart. Well, that chart ran too much, so it just messed up. Okay, let's look at Tesla. Gotta open it out a little bit so we can open it out too much. Okay, so we can see here now. Alright, if you took Tesla on this cross up here, well, that makes no sense. If you took Tesla on this cross up here, you got this move over here. And then obviously when they cross over, you don't have to wait for them to cross back down to get out of your position. When they cross over and you go long into a position, you don't necessarily have to wait for it to come all the way back down and cross down for you to get out of your position. You have to use your own discretion. If you got in here at 236.95 and chart goes to 238.57 and you didn't take one share off, then you know that's nobody's fault but your own. You know, it's greed. That's all it is. Bottom line, it's greed. So if you got in here and this thing jumped almost 2 points on you and you didn't take one share off, then nobody can help you at that point, right? Because right after it jumped up here, it must have hit a resistance over here. If I went out to a bigger chart, we would see why it stopped where it stopped. And this actually was just a range, a double top range over here that it was hitting. I'm sure there's a better reason for a stop there. I'm sure there's a way better reason for a stop there. A way more technical reason. not there. Okay, I'm just trying to figure it out here. Yeah, now it's just being a little pain in the ass. Okay, whatever. But there's got to be a better technical reason other than that, just that double top to get out of that position. But anyways, let's try to make this bigger. Alright. So if you went long over here, you got a point in something, almost 2 points. You should be getting out of your position anyways, because that's quite a good trade. I mean, you're in here, not, you know, you're not gonna expect to go from 236 whatever to, you know, $500, right? So you want to just get in and get out when you're comfortable. Most of my comfortable range for me on a point mover. What I call a point mover is a stock like this, like Tesla that moves in points, or like VRX that moves in points, or like Blue that moves in points, you know, the big guys, right? So when I call a point mover, I'm taking money in points, and I'm also taking money at resistances or support areas. So say for instance with this blue, if you just only traded off those two moving averages, just only off the two moving averages, you would have gotten in long anywhere over here. Obviously you weren't here for this. This is when the morning happened, and it switched from after hours to pre-market, so the gap up already happened. You didn't catch this cross, okay, whatever. Now you're in here. You're already seeing that the 8 is over the 13, and it's holding. The 8 is over the 13. So you're thinking, okay, I can take a position here, being that it has not crossed down yet. So you take a position there, and your risk is right at the lowest point of that trading session right here, which would be, okay, this is after hours, this is pre-market. There should be a line down here separating the 2 days. Now, so this session over here, your stop is here at this bottom, at that low for that session. So that's your stop there, and you would be able to ride this over here and open up into a massive gap up. And then, I mean, obviously you would have to figure out where you want to get out. But if, say, you got in over here at 81 exactly, and then it pops on you to 81, obviously you let something go. So you let this one go, you got to 82, you're still riding it because the candles over here didn't give you a reason to sell. What I mean it didn't give you a reason to sell is this one stopped here and this one here. So there's a gap here. So once you get a gap up and you get volume coming in like this, over here your MACD's just getting heated up. It's not even hot. So you're like, okay, let this baby run. Then this goes up here, and you end up having a bearish harami over here. So at this first instant where this candle opens down, if you haven't taken any money here, this would be my first sell point of this, if I didn't take any money here. But usually I'll just take out on a point mover, 1 point, 2 point, I'm settled with that. And I'll for most instances, depends on the size that I got, and also dependent on if I have any of the trades that I'm in. If I have 2-3 trades that I'm in and I get 2 points on this, and sometimes I'm not even looking at the chart, sometimes I'm just looking at my my trade thing and my window, and then if I see 2 points like this, I actually just sometimes just close the whole position and get out. And so I would have actually, you know, if I did play this way, if this was the only chart that I was looking at open, if you played this like this, you would get out over here. Or if you just wanted to play the moving averages cross down, you would wait till it gets up here, and once it crossed back down, you would get out of your full position. So you could have traded it like that, just from one moving average cross up to one moving average cross down, and then you'd be out. Then you'd pretty much get the brunt of the entire move, but you'd have to deal through some of this. And if you were into candles, I would never ever be in this stuff over here. I won't settle for this stuff over here. Shooting star, hanging man. This right here is a huge bearish harami. This one over here came back and did a Pearson and shooting star, bearish harami, doji. I mean, I am not playing around with all this. There's tons and tons of bearish signals over here telling me to just get out of the trade. So even if I was in this trade and I got up to this point over here, just candlesticks alone would tell me to just get out. So I wouldn't play with that. Now the moving averages. So you use the moving averages now for your entries and your exits, right? You got that down, you're making money, you're consistent. How do you use the moving averages for something else now? Because they can be used for a lot more things than just your entry and exits. They work great for entry and exits. I mean, it's proven right here. You can see it up, down. What ticker is this? This is blue. VRX, doesn't really matter. What ticker you want it to be. It's not really a ticker that I'm concerned with. So what do you use the moving averages for other than finding a great entry for a long or a short position? Obviously it's proven here, right? You guys are seeing this, that it's proven that you can make money just basically clicking short, long or short, on a cross up or a cross down. Okay? What can't you see that's small? What's small? Is the screen small? Your screen small? I just want to know. Oh, you mean this. But you do have a full-size screen, right? Just checking. Okay. No, because the reason why I'm asking is because I'll bring this over to you. Is because the way I have it set up is I just see a miniature version of the screen. I don't actually see the entire screen. So I thought, oh my god, I thought that was projecting to you guys that small. Scared me. Okay. Right. Yeah, well, Prince, I can't help that. That's VRX right up there. So this is VRX. So if you were just using moving averages, you would go short at this point here. You would have gone long at this point here. You would have rode this short all the way down over here. When it crossed, you would have gotten out. Great short, great long. You'd be cool with this position. Nice money. You're banking. Okay. What else is the moving averages good for? Anything else that you guys see that the moving averages do besides giving you an entry and an exit? Look at it for a little bit and tell me if there's anything. Clint. Okay, so you're seeing support. Support and resistances. Okay. So besides giving you entry and exits, it's giving you great support and resistance areas. As you can see all the way down here, the 13 was working sweet as your resistance for your short side. Gives you great, Mike. It gives you your stop areas also. It gives you all the way down here. Your stops are going to be right in over that line. All the way down. When you enter into the position over here, you don't automatically put a stop right over this here. This is just, you're asking for trouble if you say you got into the short right here where it crossed, right? Don't just throw a short in. This right here, this 10 seconds right here of a trade is going to be your riskiest point of the trade. Even if you go long or short, it's going to be the riskiest point of your trade. This is where, if I went short based on this, I would have been short at a different point of this chart, but that's just because I trade differently. But if you just went short here, don't put your short right over the moving average right away. Don't just do that right away, because you're asking for trouble. Find another area on this chart for me in this area that you would use if you took a short entry here, right where it crossed. Where would you use as your resistance areas for your stop, for your first stop? What would you guys use? The pre-market high. Okay, right there. At least it gives you that there, and it gives you that there. So it gives you a buffer zone here that, hey, this entire area here, and then it even gave you a confirmation of it here. So if you took that short position there at 99.60, your stop was going to be at $100. So you're talking 40 cents on a monster move on a big stock with a 40-cent stop on 99.60, and you wrote that baby down all the way. And if you lucked out and you wanted to cash out anywhere down here, you got 96, 95, 5 something. I mean, that's a pretty impressive. See, Kevin, you wouldn't do high of day here. You wouldn't do high of day. Why wouldn't you do high of day? You'd be risking from $99.60 to $102 basically, right? Because you never, when you put in a stop, you never put it exactly at the point where it stopped, because it can always retest that level and then stop you out right at 101.95. If I had to put a stop on this, say I was using high of day as stop, I would have to put a stop all the way to 102.25 or something like that, 102.20, somewhere way above, not way above, but well above that area, where if it decided to pop back and touch it and then, you know, flush, then I wouldn't have gotten stopped out. You never put a stop exactly at a high of day or a low of day, because you're gonna get yourself stopped out, and then it's gonna move in the way that you wanted it to move, and you'll be crazy. Or you can average up, but I don't average up, I add. So if I shorted here, I have a stop here. I would have shorted here personally if I played this chart. I didn't play VRX today. I can show you a couple of charts that I played today and how I played it, but if I was shorting this technically with candles over here, I would have shorted here based off this bearish Harami candle pattern right here. 1 2 1 2 gap down, I would have been short anywhere around here. Then my risk for sure would have been high of day, because I would have had obviously a closer range to this area over here. There is a double top over here too, so you could have shorted there too. I mean, that's on a 1 minute. I'm sure you would have seen it. There's a perfect double top. Yeah, perfect double top over there too. So there's quite a bunch of ways to get into this trade. Double top for whoever saw it, or for me would have been the bearish Harami signals up in the top, or even if you used the simple moving average crosses, you would have gotten in over here when it crossed down at 143 cents. Okay, so you had quite a bit of if you were just watching this chart, you had quite a bit of areas to get in, long or short. And then obviously you see now how if I use a 1 minute, how it gives me a quicker play, but you see how the 1 minute does not apply to the stop on the as using the moving average, right? Because the plays are too up and down. This is too much. If you look at this on a 8-hour chart, it's too much for me to look at. I don't want to look at all this all day. Not anymore. I used to. I only use 1 minute now if I'm doing an IPO, a parabolic, or a knife. I don't use 1 minute charts at all for anything else. I trade off the 10 minute now, and I was off the 15. I broke it down to 10, just to get smoother, cleaner signals on my entries and exits. Okay, so say you got in over here. Now you use the moving averages as your stop and you work them all the way down, and then even if you used it as your stop, when it popped over the stop here, you got stopped out. So this was your entire trade on VRX there, just using the moving average. Or if you're looking at down here at your stochastics, once the stochastics crossed back over, you could have said, hey, I'm done, I want to get out of this position, right? If I was playing this and I was using candles only, I would see a hammer right there, but then I'd see a gap down, so I'd say whatever, I'm still short on this thing. I would see an inverted hammer over here. I'd see an inverted hammer over here, but then I would see a gap up, right? So that right there, those 3 candles would tell me get out of that short position, because I'd be down, gap down, inverted hammer, gap up. Those 3 candles right there would tell me get out of that short position. Okay. 1 second. Corey, I can't even see these private messages. Nobody else, I don't think you guys can see each other's messages, can you? Just want to know. You can't, right? So Corey, nobody else is a moderator here but me. So anybody can ask me anything. So you guys are not seeing anybody typing anything. We have 46 people, so that's a pretty nice turnout. Okay, so these 3 candles would get me out of this position, alright? So moving average, you use it as an entry or exit, and you also try to use it as a stop. As not necessarily, you don't want to put this thing a penny over all the way down. You want to, give it some leeway, but use it as a general stop and write it down or up or whatever you're doing. It would apply to any other chart. If you went long on the UVXY trade, you would just use it as a guide, as a stop all the way up until wherever you decided. You can use the 8 if you want to use a tighter stop, or you can use the 13 if you wanted to use a more loose stop, or give you a little room to catch some moves, because at this point over here, 8 would have stopped you out here, but then the 13 would have held you into the trade, but it didn't really give you much more move to the upside anyways. So the 8 stopping you out here probably would have been fine anyways. But the general idea is entries, exits, and support and resistances. So you got yourself a situation now where you can pull up any chart. I really don't care what chart it is. It gives you a short position, it gives you a long entry position, it gives you a short position. I mean, I can do this all day with whatever chart you got for me, and you'll see that it's just too easy. I mean, if you went long here, you'd get this move. If you went short here, you'd get this move. If you went short here, you'd get this move. You know what I'm saying? Like, it's just no matter what chart you throw at me, the moving averages are going to give you a beautiful trade every single day of the week. And if you concentrate on a couple trades, look at this short over here, and write that 13 down all the way down, 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 down. Oh, this was kite. If we did amber, stay away from charts like this. What I mean is, see all this garbage over here? You don't want none of that, because your moving averages are going to fake you out. You're going to be scalping for pennies. You don't want that. Alright? You want charts like this. Alright? Where your moving averages are nice and clean and far away from each other, far enough away from each other. But you don't want moving averages like this, where they're tight and they're up and they're down and they're up and they're down. Find yourself another chart. Don't play charts like this with this strategy. You will lose money. Alright? Okay. Let's add something else now. Let's get out of this ambush. She's scaring me with that chart. Any chart, I'm talking about any chart. Look at CMG. Sweet. You see how you keep on this? When your chart is doing this on this strategy, do not use this strategy. Do not play this strategy. You will lose money up and down. So when your chart's choppy, you leave it. You want your moving averages to smoothen out a little bit. Once they start smoothing out, could be up, could be down, you need it to just smoothen out. CNX, doesn't really matter what chart you pull up, they're gonna work. So that's the 8, that's the 13, that's your support, that's your resistances. And let's add something else. Now when they get far away from, say, like you see how it's far away from a moving average here, 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 you gotta add something else in that's gonna guide you. Let's add something. Okay, on my charts I have the 50. I gotta change that color. Oh crap. Set properties. 50. I have it a little fatter on my chart because it's a standoff line. I like to see where my 50 is. Okay, not that color because I have another reason for that color. What color do I use for my 50? Oh, I use this purplish color. Alright, cool. 50 exponential. Okay. when your charts get away from you a little bit, meaning that they move away from the moving averages and you don't know where a bottom is or where a top is, you want to have a bigger boy indicator that can tell you, hey, I want to be in play, I want to be against it, you know, I want to be short in, long in. But for example, on the CNX, you see how it came down and tagged the 50, and that was kind of the support there, and then it rode all the way up. But once your chart, for general knowledge, if a chart is over the 50-day moving average, it's a bullish chart. If a chart's under the 50-day moving average, it's a bearish chart. And that goes for any time frame that you want to use. May it be a monthly, a daily, I don't care what time frame it is. If your chart is under the 50, it's a bearish chart. If it's over the 50, it's a bullish chart. Alright? So just keep that in mind for any chart. Okay. Let's jump back into the chart. Now the 50 is going to help you and guide you when a chart gets away from you as far as what you want to do with it. A lot of people there are a lot of different ways to trade moving averages. You can trade either, okay, if a price goes above a certain moving average, I buy. If a price goes below a certain moving average, I sell. The 50 is not there for you to trigger your entries and exits, alright? The 50 is there to guide you along as you trade. If something gets away from you, if something goes para or something pulls really hard, if a trade just runs or something, the 50 is not there to trigger your entries and exits. Don't use that as anything else, but if your chart gets away from you, that you want to see a point where it should stop. If it goes too much, you want to see a point where it should stop. So the 50 is there to guide you, not to give you entries or exits. And on the intraday, it's not the same theory as the above price, below price thing. That's more for like a daily. I mean, obviously it applies, I guess, in a certain way, but don't use it as your entry or exits. You have smaller and moving averages that are gonna work in your benefit. You can also use, and I'm just gonna, if you think it's confusing, that's fine. You know, if you don't want to use it, that's fine. But using VWAP is very important, because a lot of institutions use VWAP as their entries and exits. How many charts do I focus on, Ronnie? I got 22 side charts, 3 main charts. So I got 25 charts that I look at any one point in the day. Plus I got my scanners that I constantly tick. I probably run through maybe, I would say 150 charts a day. Easily, just scanning. That's just intraday. At night, I probably scan maybe about 400 or 500 sometimes. But anyways, this blue line here, this teal color line, is your VWAP. It's a weighted moving average, right? So VWAP, volume weighted average price. Okay, so it's all tied in. And obviously it's a new indicator, relatively new to all the other ones, but it's very precise. Where if you read up on VWAP, you'll see that institutions use VWAP a lot. So if institutions are using something, then shouldn't you use it? Maybe. So you can trade off VWAP alone. Some people do. Some people don't. Some people don't want to use it. Some people don't care for it. I don't care. I like it. I use it, and it helps, because besides, and I can trade without any moving averages on this chart. I can trade with just candles alone and still be profitable. But I incorporate so many different things in my trading that's the reason why if something fails, I have something else that backs me up. If something doesn't work, I have something else that backs me up. I mean, I know candles, I can read L2, I can read my indicators, my scanners, my moving averages, trends, flags, patterns, everything. I got them down packed. Like, I can just call out things. So I know them, like, you know, off the top of my head. So I can trade without any of these things, but I choose to use them because when I'm scanning through a chart or I'm looking at my 25 charts, there are things that I look for, and I don't see candles anymore. Now in my head I don't see candles. It's like a freaking matrix thing where I see indicators and I see certain moving averages that I want to see. So it's like I got tunnel vision now. When I see my side charts, I do not see candles anymore. I just see either price that I want to buy at or price where I want to sell at. When I scan through, and I do it with you guys during chat, like I can, like one of my scanners is still alive for some reason. It's not scanning, but I can, and they're linked. So whatever that was, it popped. Okay. And so I can scan through all these charts here, and just looking at it, I can tell you if I want to buy or sell any one of these charts, any one of them, like just by scanning through it. Okay. So what the hell is that shit? Okay, let me get back to a human being type chart. Okay, so I use my moving averages a lot, but they're not only for my entries, exits, supports. They're also for my visual confirmation of something real quick. Because when I'm scanning something, I just want to see it for like, you know, half a second, and I know if I want to be in or I want to be out, or if I want to give it a second look. And what's my VWAP setting? Is there any setting for VWAP? Nope, mine doesn't have any setting. Mine just says line and color. That's it. There's no VWAP setting. I think it's all factored in. Okay. Now, so that's the moving averages. That's some of the stuff that I have used, that I use, and that's how you can utilize this 8 and 13 to have very consistent gains each day. Day in, day out. My dude Ryan went like 20 days straight, consistently green on this simple formation. So if he can do it, you guys can do it. And all he played was, hey, this is over, I'm gonna go long. This is under, I'm gonna go short. That's all he did. Nothing else. And he took money wherever he felt like taking money. And so once you take money, you're never losing. Okay, look at this one on a 10-minute chart, because I use 10 minutes now, right? Say I was doing this VRX all the way from down here in the pre-market, I would have gotten this entire day here without getting stopped out once, from morning at 90.64, whatever that is, all the way to close at 98.42. I mean, that's just insane. That's just using the moving averages, nothing else here. So if you just want a simple strategy that's going to make you money consistently, try that. Alright, if you want to get into a position where you know, you're saying to yourself, I keep buying up here, and you want to buy here, how come I'm not finding down here? Well, this is a simple way to get in down here. This is a simple way to say, okay, this crossed over, I'm going to buy it. If you were a robot, how would you trade? If you were an algo, how would you trade? If it crossed up, click buy. If it crossed down, click sell. Alright, if you're a robot, you had no emotions. Your emotions right here, in this particular trade, for instance, your emotions is the one that stops you from getting into this trade. It's not that the trade's bad. It's not that, hey, this, you know, should pull, market should pop, whatever. The emotions is the one that makes you lose your trades, not the trades themselves. Not the market, not anybody else, not anybody on Twitter. It's your emotions, your greed, all the sins of trading that makes you lose as a trader. Nothing else. So if you factored in that, hey, this is above, and I'm going to trust this strategy, and I'm going to buy it here, and then, hey, look, I don't have a reason to put a stop here right now, because these are pretty low, and I don't want to play with it. That's why you got the 50. Alright, so you put your stop right under the 50 on this one, just saying, because it's so close over here, and you know that the 50 is going to be strong enough as a support for you. So, hey, you didn't have much action pre-market. Okay, fine. You don't want to put your stop all the way down here. Fine. You got the big boy 50 sitting right here saying, I got your back. Bring it. So you take that long position, you put a stop under here, and you let it rock. And you see what happened. You trust the strategy, and you will profit. Just trust it, and you will profit. Cross up, you go long. Cross down, you go short. Set a stop somewhere obviously functional. Don't put a stop all the way at $70 or something and tell me you lost money. Or don't put a stop right here 5 cents under and tell me you lost money either. So have a decent can I summarize the strategy? Yeah, if the red line goes over the white line, you buy, and if the white line goes under the red line, you sell. 8 and 13, you always want the smaller number over the bigger number. Color coordinate your lines obviously, so you can tell them right off the top of your head. Like I know these, my red line is my 8, my white line is my 13, my teal is always my VWAP, my purple is always my 50. So I have this how do I use the 50 EMA again? No. I'm just saying like in this case, since you did not have a real support, a real area of support in pre-market, like if you took this trade right here, for instance, just based on the fact that the moving averages are above each other, I'll blow it up a little bit so you can see. Okay, just because the moving averages are above each other and you wanted to take this position long. Now, you had no other real support areas. Your support area would be all the way down here. Now, you don't want to take a trade over here at $90.64 and put a stop over here at $89.13. It just makes no sense. But why would you have to do that when you have this 50 moving average sitting right here? Use that as your support. Use that as your support for now, just for your entry. Once you get into your money, now you can start changing your strategy. Say you bought it over here and you popped over here and you sold at 92.40 something. So you got from 90 to 92. So you made 2 points. Say that was your day. Say you were happy with 100 shares and you made $200 and you were done for the day. That's fine. But you can also use your 50 as your initial support over here, because this was the strongest support that you would find as a stop. So that's all I'm saying. I'm not saying to trade off the 50. I'm saying when your charts are far, when your moving averages are far, when everything's out of whack, and you want something to have your back, out of whack, have your back. I should be a rapper instead. Use the 50. Alright, use the 50. Alright, also now your VWAP is going to come into play as a resistance or support a lot of times. As you can see over here, resistance. Here's a key. When you are short in something, you want the price to be likely, not all the time. If you're short in something, you want the price to be under VWAP. If you're long in something, you want the price to be over VWAP. So everything is in correlation to a lot of these moving averages. They're not just lines, and you can use them for a lot of different things. Now, how do you know where to add? How do you know when to get in? Okay, so you got your entry. Alright, you took a couple points over here. If it came back down here, and then you realize that the 13 moving average actually held as pretty good support for it over here, right? So now you're looking at this down here, and if you really make this into a smaller chart, you would see that you had quite a nice little flag right here. Now once this flag broke, you could have gone long again, right? Seeing that you could have gone long again, where would your stops be here? Your stops would now be here at the low of the opening of the day. So if you went long here at the flag break at 91.39, your stops are here at 90.50, and that's your first stop. Remember, your first couple minutes is the only part of your trade that you should be really worried about. If you took that trade over here and it broke down here, and you're seeing that it's just continuing a downtrend, you don't have to wait all the way till it gets down here to your stop. You can decide on the volume, or you can just take a quick look at your indicators. You would see that the volume is still going up here. See the line? Still going up, right? You see your MACD still over. You see your stochastic still good. So it would give you a little support where you're saying, okay, this is your rearview mirror over here, right? So you just glimpse over at your rearview mirror and you're saying, okay, well, you know what? I'm still safe. There's no cars next to me. So you hold it for now. Or if you take your stop here and you really want to make the trade happen, then Obviously, use your big boy as your support down here, which isn't too far, but it's too much for me. I would never risk that much. I would risk low of day at most. That's it. And then you would ride it up again, and once you got into the trade and you're safe, you use that 13 as your stop all the way up, and then you just ride that train all the way up, all the way up, and then you'd get stopped out at that point right there, and then you'd be out. So that's how that would work. Now if I bought here and I never sold any all the way up, where would I be adding? I know that a lot of people ask me that. Where would I be adding and where would I be selling? Okay, I would be, if that was, I gotta make a circle. Okay, I would have probably sold some right there. Reason, 2 hanging man right at the top of a chart. I would have sold some over there. If I didn't sell all of it, I still would be right in that 13, right? That's where my stop is. Say I sold half there for some reason or whatever, I'd still be right in that 13 as a stop for the rest of them. Where would I sell some more on this particular chart? You see that top right there, and you see that top right there. When they came together, sorry, that line's kind of off. But when they came together the second time, I would have probably sold some more over here, because I just sometimes I'm more into selling into bigger candles, and I'm not waiting for that push through. I'm actually selling at the peak over here, so that just in case it pulls like that, that I'm not, get caught up in it. What if none of this happened? What if none of this happened and this formed a perfect double top and then came back down? Could you risk all that? No. I mean, your stop would be at your 13 and it would cut you off right over here. But just saying that these 2 double top over here worked as a perfect double top and it shorted, it came back down, then I would have sold into the double top, right? And I would have saved all my money and still end up selling at high of day, just in case this was a double top and it did pull back through. So I'm always selling towards or right before a peak of a trade. Before it gets there, I am not concerned about if it flies through there. I'm taking my money here because a bird in the hand, right? It's better than 2 in the bushes. So in case this thing pulls on me here, at least I'm sure that I took my money right at the peak over here. Now if I was still in this trade after all of this happened, and I still liked the trade, and I still held through this, and I still held through this, where would I add? I would add over that break line over here. I would add here for more long. Just saying I was still in it. I mean, most likely, not everybody. Hey, look, if you followed the 13 and your stop was there, you would have never gotten stopped out, and you actually would have been able to say at the end of the day, I wrote this thing from the beginning of the day to the end of the day, and and it would be a realistic, safe trade. And you could have said that, yeah, that's what I did. But most people would not. I probably would not even. If I was trading this, I would have sold into peaks, and I probably would have never caught all of this, because I like when my money's banked. So especially if you got in here at 91 or whatever, and the price is all the way up at 95 at 5 points, that's pretty sweet. So usually on something like this, if I'm trading 4 or 5 things at one time, I'll put trailing stops on things like this and just leave it, and then I'll just see a little thing that's just sold or whatever, it just pops up, and then that's the end of that. I sometimes don't even look at the chart anymore. Difference between a hanging man and a hammer. A hanging man is a hammer found at the top of a chart, and a hammer is a hammer found at the bottom of a chart. Signals a reversal. So right there, that's a hanging man. I'll show you. That's a hanging man found at the top of a chart. Signals a reversal. Hanging man, inverted hammer signals a reversal to the upside. Hanging man signals a reversal to the downside, but doesn't always work. I'll go into it a little bit more. I'm trying to make that video, but a single candle is not gonna. A single candle is gonna give you inclination of a change in trend or an inclination of where the stock may go, but the following candle is the one that tells you where the price is gonna go. So even if you're using a signal where you get a hanging man over here, it's not this candle that gives you the idea for the short or the long. It's this candle that's gonna confirm for you short or long. So there's a lot of things that goes into the candlesticks themselves. It's not just looking at a candlestick and saying, okay, I want to go long or I want to go short. You can say that if you see a candle pattern, which is more than one candlestick together forming a pattern, but you can't say I'm going to go long or short based on a candlestick by itself, because a candlestick by itself is just a price action up or down and where it closed and where it opened. It tells you nothing else but that. So a candlestick by itself tells you nothing, gives you an idea of what the buyers and sellers were doing, but the candle after is the one that's going to give you the confirmation of where it's going to go. Can I do a web on how to... Yeah, I'll do a web night on how to scan. That's fine. And that's pretty simple. But I don't really have much scanners, but I'll show you how to do that. You guys got any more questions about this strategy? Obviously, you can see it works. It works. I mean, like, look, I guarantee you guys, you use this thing, and you just, it works. I can scan through some of my stuff. Any chart that I pull up, you see now you're seeing it, the red and white lines. Look at nothing else. Focus on the red and white lines alone. I'm just scanning through one of my scanners here. Focus on the red and white lines alone. See nothing else but the red and white lines, okay? You guys focus in, seeing the red and white lines only, okay? Only the red and white lines, nothing else, okay? And you'll see it. Any chart that I pull up, I don't care. These are all different charts that I'm going through, by the way. All different charts, okay? I don't even know the names of some of these. I'm just going through one of my scanners. I'm pulling up the scanner. I'll click here. I'll click here. Click there. I don't care which one of them, okay? I don't care which one of them. These are just past trades that happened today. Doesn't really matter which chart I pull up. Look at the white and the red line. You'll find your entry, you'll find your exit. You get out of the choppy ones, you stay out of those, and you will consistently every single day make money. Guarantee you. Okay. Now I'm tired. If I ever wait, I gotta read this. Kevin says, okay, you have to go. Yeah, I know Brandon pretty well, Kevin. He's a great guy. Love talking to that guy. I used to come into the room every single day and talk to that guy early in the morning. He's a great guy. But this is, yeah, I'm gonna stick this on YouTube after. How long have we been talking? Oh, an hour and 12 minutes, not bad. Remember, G, when we started doing the webinars, sometimes it'd be like 3 hours long, and we would have no idea why it went 3 hours, but we would just be like, I don't know, we were just talking charts, and next thing you know, it's 3 hours. But it gets exciting, man, you know, figuring out something, getting that aha moment, you know, getting that light bulb going off in your head, and you're figuring out, yo, I just want to trade tomorrow. You know, and you guys are gonna try this strategy tomorrow, and you're gonna make money, and you're gonna be like, oh crap, this is a little bit easier than I thought it was. So don't get it too complicated. It's pretty simple if you apply this strategy. What was that stock today, bro? Forgot. It wasn't. What was it? I forgot the name of it. The KSU. Oh, KSU short. When I did that one. Okay. I did 89.25 or something. So after it broke down over here, I actually had it on a chart. And when this volume came in here, it was 500,000 on a 10-minute chart. It first popped down. I'll show you exactly. I'll put on a 1 minute so you can see exactly what happened. It first popped down, and then it popped up, and that's when I nailed it. I used this actually. I kind of was watching the 50 on this one because it was right there, but I was using the 10 minute. But the 50 was right over it, and I used the 50 kind of as a guide where I shorted just under the 50, and I ended up with I got fill at 89.20. It was a market because it was kind of hard to get fill. It was already coming down on me, and then once I got in, I was actually short already, and then the news happened, and I was like, whoa, that just worked out really good. But I was actually short just based off it was actually on one of my scanners for what? I don't know. I think was it a volume scanner or something? I also have a scanner that scans for trades that are currently over VWAP or under VWAP. So this was probably off that scanner. I have 6 scanners. So if it trades under VWAP, it's already on the scanner. So it was probably on that screen already. So that's why I picked it up. But this was icing on the cake here. This was just magic. I didn't expect that. I was pretty much playing for that low of day break and then maybe a little bit more, but that pull right here was just that was just luck. Sometimes that happens. You know, being in the right place at the right time, and that one was one of them. Most of my scanners are from Trade Ideas, yeah. Some of them are customized. Yeah, well, it turned out to be a really cool short. That worked out to be perfect. But even if you did the MAs, right? Just say you did the MAs, you would have been short up here. You would have been short in the morning. And then this would have carried you along anyways. So, in this one trade, you can see that the 13 never even got, never even got messed with, or it never tried to cross over or nothing. So yeah, if you don't have Trade Ideas, you should definitely check it out. I think G just signed up for his, and it gives you some really nice scans. You can customize it to do a lot of cool things. Well, maybe we'll do a webinar one day where we'll just customize a scan and see how it works. But obviously we can't test it because it'll be 9 o'clock at night, but we could probably back test it or something and see how it works. Any other question? Corey, I can't see any private messages, so just throw them out at me. Oh wait, maybe I could. Let me see. Oh, STRP. After the halt, I just kind of jumped in on that one. It was over the 50, and it was over VWAP, and I just kind of jumped in on it, and it worked out. But on some things like this, some trades like that, you just gotta be, over the 8 and 13, just bullish. So once it was over there and the volume was coming in already, and on my other scanner, MMs were buying, so it was just a go for me. So I just jumped in on the market order, and then I sold somewhere up. I didn't actually get up to the top. I actually sold somewhere on here, somewhere in the 12s or low 13 somewhere. It was a market in, click, market out. That was it. It was like click, out. So remember, I can trade like this, right? So sell. Oh shit. Well, I can't put an order. It's after hours. But I just put an order in. I have to cancel it. Okay. So I could just click here. It says buy or sell, and then I could just click here and buy or sell. So I don't actually have to go into a window or open up a trade box or anything. Romero, the 8 is the red line, the white is the 13, that purple line is the 50, and the teal color line is VWAP. And they're all EMAs, and the indicators are just a volume indicator, MACD, and stochastics slow. Pretty much it. So I hope you guys learned something. I hope you guys can apply some of these things to your trading day, and I guarantee you it'll work. So just keep at it. And there's a lot A lot of other tricks that you'll learn using the MAs as your entries and exits. There's a lot of tricks to it. I think maybe we could do another night full on that, because I got a lot of little tricks that I've discovered while using them that I can share with you guys that'll get you in quicker, out quicker, and a safer trade. But for the most part, it's just it's a golden strategy, and you're lucky to be here, just going through this with me, because there are a lot of people out there that have no idea what to do with this stuff, or where to properly get in or out, and I've just given you a pretty much a guaranteed strategy to make some money if you play it right. Alright, I would be interested in to know how to trade large size for fast scalps. Yeah, that large scalps, large sized scalps comes only with experience and time, and having a buffer zone where if it pulls on you $1, you can afford a $2,500 loss in 2 seconds. So if you don't have that buffer, then a large size scalp is not the way to play. This strategy that I'm giving you will build your account up and will get you to that large size scalp day one day, but start off with something simple like this. Okay, how can see that fake out? Yeah, you know what, it happens like on VRX here. There are fake outs on the strategy. You see, this right here would be considered chop. Ryan and I were looking at this 1G this morning, and he said long, short. I said, I don't know, it's too much chop. If Ryan's here, he can vouch for me that I told him leave it alone for now, because it was up and down in this general area, and I just call it chop, and I don't want chop. So if it's choppy, I don't want it, I don't play it, it's not part of this strategy. This strategy will eat you up if you play on a choppy chart. If it's a sideways chart, it will eat you up. So it's a great strategy, but you need to get a chart that's a little flowing. Let me show you. Damn, none of my side charts are really that choppy today. ATV was pretty choppy. Let me see. ATV would have faked you out a little bit today, because it seemed like, like even if you used it as your stop, you would have gotten stopped out. Like, some charts are just choppy, and in this case, would you be sensible enough to use the 50? Possibly not. You would have your stop at the 13, and you would have gotten stopped out here and lost some more money on the short side. Everything is every single thing that you do is relative to the other thing. How much money you want to make, how much money you want to lose, how much you can how much patience you have. Everything is relative to everything else. So you gotta decide, what's my risk, what's my goals, stuff like that. And that's where you set your stops, and that's where you either make money or lose money. But this is just, I can just go on and on and on. I could talk here till like 3 a.m., but we don't have time for all that. But I do hope. What makes a choppy chart? Side action. Nobody wants side action. It's either going up or it's going down. I don't want it any other way. It's either there's a consistent flow to the moving averages. If the moving averages start going like this, where you see it's up and down, bouncing around, that's chop. Bouncing around, that's chop. You don't want that. Get out of the chop zone and get to another chart that can make you money. If you don't have an app on your mobile phone, get an app for with just charts, with just stocks that you can add. I have an app, it's called Stock Master, I think it's called, and I have like 2,000 charts on there, and so every day at the opening it scans for the top gainers and top losers, and it sorts like that. So every day at like 10 or 10:30, I'll just go through it and see which one's the moving ones, which one made a big move in the morning, stuff like that. I'll throw those on my side charts, keep an eye on those, or which ones yanked, I'll keep an eye on those. So you have to have something where you can also find other trades. So beside my 6 scanners, that pretty much gives me like 50,000 trade ideas a day. And then I have my mobile app, and I don't ever look on Twitter for trades. I look on Twitter if I run outside to take the dog out, or if I'm just taking a break. I'll go on my mobile and reply to people, or like something, or or whatever, but I don't use my Twitter at all for anything. I don't even have a news feed. I read everything from the charts. So it is good to have a news feed. I don't have one. I just have enough going on as is. Okay, let me just look at this last one for Andrew. CACC. Yeah, what did we say about this one today when you asked me? I can't remember. We did say that was topping over there. I remember. You have awesome calls for scanners. Well, you got me. You said waited for the pop, but it never did. Sorry. But it did, kinda. I don't know. I can't remember. There's so much stuff we do during the day. This chart's very bullish at the moment. Whatever this chart is. Came down a lot there. Stochastics a little hot. MACD is good. Volume's coming in. It actually could probably gap a little bit. Pull a little bit at open. And then it could probably run some more. But it also depends on the market tomorrow. Obviously you guys saw, you know, what happened with SPY and all that. SPY just put up a pretty bad candle there. So, and it also broke through the areas of support. So I'm still, remember on Sunday, if you watched my video, I was calling for a down week on the market. And I was still looking at this target down here at 205 for SPY. So we'll see what happens. I'm not, gonna predict anything, but that was just my that was my call on Sunday, and I'll still stick to it. See what happens. Dan, what question, buddy? Sorry, there's so many questions flowing through here you won't believe. Dan. I'm gonna scroll up, Dan. Wanted to know what you focus on when you're drawing your trend lines. I'm focusing on high points, low points. That's pretty much it. Even though I occasionally play a small cap, screw why you focus on higher price stocks, because they give the most range. Small caps like those little ones, Gene and those little thingies, majiggies. They're scary to me, honestly, and I only scalp those. I really only scalp those because they can crush you. VTL I play on trends because I think it still has a decent upside to it. Anything like Gene or VLTC or any of those type of things, I just kind of scalp them for the most part. And then if the trend holds, or if it's something that has a strong movement, a strong volume or something, I'll hold it. But for the most part, on any small caps, I'm in and out. I don't hold those things for too long, man. They're scary. They can go up and down so quick. Can you answer how you can play a stock when it reaches its 52-week high or low? 52-week high is usually a bullish indicator. 52-week low is usually a bearish indicator. Any stock that reaches a 52 weeks high has a most likely probability to break through that high, and any stock that reaches a 52 weeks low has a likely probability to break through that low. But it is a good entry or exit based on the fact that it can double bottom or double top. I always play those on the opposite way of the way that they should be played, because I find that I get better results from it. I mean, obviously there's 50 million stocks out there, and the probabilities that are statistic wise probably says that okay, it's 52-week low, it's gonna go lower. But for the maybe 10,000 stocks that I've played, and I've found to be that the double bottoms actually work out, or the double tops actually work out. So for me, it works out. Like with the UVXY today, 24 was never hit, all-time low 23.80 something today, 88 or something, and it bounced right off that. Obviously that news coincided with that, but it was not the news that caused the market to plunge. It was oil. Oil went under $40 a barrel. So unless oil doesn't decide what it wants to do, had nothing to do with the California news. Alright, so don't let the Twitter people tie you up on that. That obviously helped hurt, okay, but oil was the factor on that, not so much that other stuff. Okay, oil was the factor on the big market pull, so keep oil on your radar, because as oil under $40 a barrel is obviously going to pull the market down with it, and there's going to be a rough landing for that one. Anyways, guys, I think that's enough for hour and a half. You guys are satisfied? We had 48 people, so I think that was a good turnout. So for anybody obviously that do not know me, here's my Twitter at BarryMohan81, and obviously the room that we work at is awesomecalls.com, and we'll wait for that to load. There it is. So that's the room that I'm a moderator at. If you're not a member of our room, you should definitely check it out. And again, that's my Twitter if you want to pop in, say hi, follow, whatever. And that's pretty much it. Alright guys, so thank you very much for your time. Hour and a half well spent. I hope you guys learned so much. And thanks, Dan. And I'll see you guys on Twitter, you know. Shout it out. Let's get more people in here next time. So if you guys say, hey, 50 people say it was good, then next time we may have 75. Then if 75 people say it was good, next time we may have 150. We're trying to make this like the biggest freaking Wednesday webinars ever. Alright, so let's get out there and make sure that people know that you had fun and you learned something, alright? Take care again, guys. Thank you so much.